American money is changing European football a lot. Private equity and hedge funds are investing a ton of money into the game. Tom Brady, a 7-time Super Bowl champion, recently bought part of Birmingham City FC, an English second-tier club. Other big names like Ryan Reynolds and Rob McElhenney have bought Welsh team Wrexham AFC. This is just the start. More than a third of clubs in Europe's top 5 leagues now have some American investment. Teams like Chelsea, Milan, Newcastle, and Atalanta are included. The investments come in different forms, like private equity, venture capital funds, and leveraged buyouts. Experts say investors are interested in football because it can give them good returns on their money. Theo Ajadi from Deloitte, who knows a lot about buying and selling sports teams, says investors see football as a good opportunity. Welcome back to Revenue Racers, where we dive into the business side of sports. Today, we're exploring the seismic impact of American money on European football. Stay tuned as we unpack the influence of American capital on the beautiful game. Maximizing returns and managing challenges. Investing in football clubs involves 2 main strategies, according to experts in sports finances. One approach is to identify and fix inefficiencies to increase profits, as many clubs have high revenues but still post losses. The other strategy is to profit from capital appreciation upon selling the club. Private equity firms often believe that European clubs can generate higher returns if managed more efficiently. New owners typically make quick changes, such as improving management, reducing costs, and boosting revenue. The goal is to increase the club's value and sell it for a profit within 5 to 10 years. When compared to traditional companies, investing in football clubs requires a different approach due to the unique nature of the sport. Some explain that the timeline for acquiring a football club aligns well with private equity's typical 10-year investment horizon. However, rebuilding a club can take several seasons before seeing results. Football clubs offer attractive qualities for private equity firms, such as being illiquid assets with high debt levels and opportunities for improved management. They also have high barriers to entry due to limited competition. However, football clubs face challenges, such as high wage bills for players and staff, which can strain finances. Additionally, the success of a club is tied to a limited pool of talent, making it difficult to restructure the human elements compared to other sectors. Balancing commercialization and tradition. Understanding the drivers. The influx of American capital into European football is being driven by several key factors. Firstly, private equity firms have a lot of money to invest, and football clubs are in need of financial support. Over the past decade, private equity assets under management have more than doubled to around $5.03 trillion, creating a pool of funds looking for investment opportunities in various sectors, including football. Football is considered relatively recession-proof, as broadcasting rights and matchday revenue are usually locked in months in advance and are not heavily impacted during economic downturns. This stability makes football an attractive investment, especially in uncertain times like the recent pandemic. The COVID-19 pandemic hit football hard, leading to financial losses for many clubs. This has made them more willing to seek capital injections from private equity investors. Deal activity within Europe's Big 5 leagues increased significantly from $72.26 million in 2018 to $5.28 billion in 2022, according to PitchBook data. Additionally, clubs are recognizing the benefits of private equity investment, including the commercial expertise that investors can bring. This expertise is increasingly seen as valuable to clubs looking to enhance their revenue streams and overall financial stability. As private equity continues to enter the football arena, it is predicted that football will keep commercializing regardless of these investments. Experts suggest that regulators may need to introduce new rules to prevent any negative impacts from this trend. Countries like the UK are already working on such regulations, with a new regulator set to review financial rules and potentially introduce new ones. However, some argue that responsible investment can balance profit with tradition. Specialists in sports mergers and acquisitions believe that these new regulations don't have to reduce investment. In fact, protecting clubs' financial sustainability could attract even more investment in the Premier League and English Football League. The impact of private equity on football's future remains uncertain, but it is clear that the sport is evolving. As commercialization continues, finding the right balance between financial success and maintaining the traditions and integrity of the game will be crucial. With the right regulations and safeguards in place, football can continue to thrive while ensuring the long-term sustainability of clubs and the sport as a whole. The positive impact of money in modern football. Money has played a significant role in transforming football clubs and the sport as a whole in many positive ways. Financial resources have also allowed clubs to attract top-tier talent from around the world, raising the overall quality of football. Moreover, money has enabled clubs to invest in world-class facilities, training grounds, and youth academies. Additionally, money has helped football expand its reach worldwide through broadcasting and commercial partnerships. The negative impact of money in modern football. While money has brought significant improvements to the biggest football leagues and teams, it has also led to several drawbacks. One major issue is inflated transfer fees and player wages, especially in the English Premier League. Clubs are often forced to spend absurd sums to acquire talent, distorting the transfer market and creating unrealistic player valuations. This can lead to financial instability if clubs overspend and fail to achieve success on the pitch. Money has also widened the financial gap between elite clubs and smaller ones, hindering fair competition. Wealthier clubs can outspend their competitors, leading to an unequal distribution of resources and making it difficult for smaller clubs to challenge for top positions. Another issue is the shift in player power and lack of loyalty. Players now have more leverage to dictate their destinations and wage demands, leading to frequent club switches and a lack of long-term loyalty traditionally associated with football. Balancing profit and passion. Economists warn that fans could suffer if private equity firms prioritize short-term profits over the long-term health of football clubs. There's a risk that firms might sell top players or raise ticket prices to boost profits and repay debts. Some fans are already pushing back against what they see as excessive commercialization. German fans, for example, recently opposed a plan for the league to partner with a private equity investor. The clubs, which must be mostly owned by members, voted against the multi-billion euro investment due to fan backlash. Some believe that while commercialization can improve governance and benefit football, investors need to understand fans' importance and strength. The backlash against the proposed partnership in Germany and the backlash against the Super League during the pandemic highlight fans' power. Others point to Formula One's commercial success after private equity firm CVC's investment in 2006. The firm saw a 751.3% gain, showing the potential for private equity to benefit football financially. However, stakeholders must ensure that investors balance financial goals with the interests of fans and the sport itself. Thanks for watching this deep dive into the impact of American money on European football. If you enjoyed this video, don't forget to give it a like and leave a comment below with your thoughts on the topic. Also, make sure to subscribe to Revenue Racers for more content on sports business and the ever-evolving world of football. Your support helps us keep creating informative videos like this one. Stay tuned for our next video, and until then, keep racing towards your goals in the world of sports business.